All right, good evening. This is weekly chart review for June 5 to 9 by Simple Trader. So we will do a rundown on some interesting charts, some interesting stock price movements that happened within the week. Many of you already know what moving averages we use for our charts to determine whether a security is on an uptrend or a downtrend. We use the SMA 50 moving average. So we add moving average 50. If price is trending above the SMA 50, then we have an uptrend. If price is trending below the SMA 50, then we have a downtrend or a consolidation. So we add the SMA 50 to determine the general trend of the security, but we have to get the proper timing for entering and exit trades. So for this, we add the exponential moving averages. We select moving average exponential. We enter 4, 8, and 21 as our values. We color them green, yellow, and red respectively. Can you confirm if you can hear me? For those who are already inside the webinar, please type in the chat box if you can hear me clearly. All right, thanks, Stephen. All right, so we have these lines on the chart. We have SMA 50, EMA 4, 8, and 21. If you go through some of our webinars, you would find out why we use exponential moving averages over simple moving averages. So in addition to these, we also add the relative strength index. We change the settings to SPY-FRAT settings, 30. Of course, being a veteran in the market, he's been using RSI for the longest time, and RSI 30 smooths out price action, compared to RSI 14, which tends to be more noisy. All right, so we have RSI. As a general rule of thumb, if RSI is above 50, the security is bullish. SLI is bullish. It is above 50 in the weekly time frame. Now we have to look at several time frames. So we look at the weekly first. If the higher time frame is bullish, we go into the daily time frame. We also find that RSI is above 50 on the daily time frame. So what we have here is a time frame confluence. Now let's look into the monthly chart. Is the RSI above 50? Yes, it is. It's 54. So securities whose time frames agree on the bullishness of a security tends to have a more successful uptrend or a more successful run. So SLI is bullish on the daily, the weekly, and the monthly charts. So we have the first indicator telling us that SLI is bullish. What's our second? We have the moving average. Is the price above the moving average, the 50-day moving average in the daily chart? Yes, it is. Is it above the SMA 50? So we can't specifically say it's a 50-day. It's a 50 period. So for weekly, we have a 50 period moving average. The price is above that, definitely. Price actually crossed above that 50 SMA this week. Last week, it was still below. This week, it made a significant move when price moved above the SMA 50 line. Now, how about the monthly? In the monthly chart, we also see that SLI is above the SMA 50 line. So what we have here is a bullish security where all time frames agree on its bullishness. So what we have to do now is to find the proper entry. Let's go to the daily chart to find specific entries. Because if you use the weekly and monthly charts for proper entries, you might already be late in the game when you enter. So once you see that price is above SMA 50 on the daily chart, you look at the weekly and the monthly charts. If you get confirmation that it's above 50, now then you have a stronger conviction of entry. However, this does not mean that if price is not above SMA 50 on the weekly and monthly charts, you're not going to enter. You can still trade the security, bearing in mind that you will get resistances at the weekly and monthly charts. For example, in Santa Lucia, this candlestick right here, at this price, the closing at 102. At this point, we look at the weekly chart. The price was still below SMA 50 in the weekly chart. So we know that while you can play with the security in the daily chart, you know that there's a resistance at 103. So if you buy SLI at 102, your risk outweighs your reward because you have 1 centavo above 102 as a reward because you're expecting SMA 50 to be a resistance because it's the resistance in the weekly time frame. You have a 6 centavo loss versus a 1 centavo gain. So the reason you have to look at the higher time frames is to assess the risk-reward ratio when you enter a security. So for example, here in SLI, you enter in this candlestick right here. So you have a 6-to-1. Risk is in favor of reward. Risks outweighs reward by ratio of 6-to-1. So it's not a good place to enter, right? Whereas if you wait for the security to move above the SMA 50 resistance line, for example, here in the weekly chart, this broke above SMA 50 this week. Now, so what you have to worry about now is the weekly resistance. Where's the SMA 50 line in the monthly? Sorry, not in the weekly, but in the monthly. Price is already above the SMA 50 line. So having broken the SMA 50 line on the weekly chart, you don't have any more strong resistances above this chart. All you have to do is to follow the trend. Now, like I said earlier, to enter the security, you look at the daily chart. So we see a bullish crossover here. So we know that this is bullish already. But do we necessarily enter? No, we don't. We look at resistances in higher time frames and assess the risk-reward ratio. So based on our assessment, the best place to enter, SLI, is above 103. Therefore, when price breaks 103 in the daily chart, this is 103. This is the resistance. If price breaks above 103, this would be your buy signal. This is the reason why when price broke above 103, there's a huge long candlestick here, short correction, and then a continuation the day after. So this candle, the red candle here, just represents possibly people who got stuck in the security for a long, long time. Perhaps during this long period of consolidation here, that any rally is a reason for them to sell because they got stuck from this candlestick until this candlestick. So what do we expect from SLI? If we zoom out, SLI had been bouncing above the SMA 50 candle line for the past few weeks or for the past few months. Now it broke below and then it created this pattern. Do you see this inverse head and shoulders pattern? This is only one possibility. Price may pull back from here and retest 104. But if it doesn't, no, if it does not create this pattern, then it could possibly be a rounding bottom pattern wherein it will revisit its previous high above at 130 without having significant correction. This is quite a possibility because if we look at the RSI, it made a strong breakout above the resistance. So how do we know that the resistance, the breakout above 103 was valid? The RSI also broke out of its resistance here. Now for the longest time, it had been trending below RSI 30. It finally broke above that. What else do we have? We also have volumes. On a breakout, volume must be higher than the past 10 days maximum volume. So for example here, we noted that this was the breakout point, right? This candlestick right here. This was when price broke above 103. Now we look below. Was volume higher than the 10-day maximum average? This was the last 10 days. We count back. This was the highest volume for the past 10 days. And this volume 4 days ago was higher than that volume. This was 21.7 million. This was 23.6 million. So it was slightly higher, but it was higher nonetheless, making this a valid breakout. Now, SLI will find other resistances. Range resistance right here at 110. This is where it stopped. Now, to find resistances, you can either go for ranges, visually finding the resistances, but you can also use reverse Fibonacci to determine if you got the values right. So you plot with 100 at the top and 0 at the previous low. So what do we find? At 110, this is quite close to our 38.2% Fibonacci resistance at 109. So rather than considering it as a specific area of resistance, you can consider it as an area of resistance. Remember that supports and resistances are not specific levels, but are areas, because there are often overshoots in resistance levels. There are also often overshoots in support levels. So what do we have? We have another range resistance here. We again draw another resistance area, and our resistance is from 117 until 120. So this would be your first hindrance, 109 to 110. Next is, so price closed today at 110. Next resistance, if price breaks above 110, is from 117 to 120. And then your next resistance. Again, as a trader, we work on assumptions. When securities bounce, the strong resistances are the 38.2% and the 61.8% Fibo levels. So those are the areas where price could turn around. Now, if price does break above 38.2%, you have to look at volume. If it breaks above 110, the volume on the breakout must be higher than the past 10 days for it to become a valid breakout. If not, price could go back and form another consolidation pattern. Now let's look at another interesting security. How do we spot these securities? At the end of the week, we look at the chart patterns and we look at the candlesticks and then use those signals to trade for the next week. So before you enter into a security next week, you should have studied the charts during the weekend. Use the weekly charts to study the security. Those which look bullish with regards to the RSI, those whose prices are above SMA 50, and those who show bullish crossover. Again, for those who just joined us, a bullish crossover happens when the 4-day EMA is above the 8-day EMA and above the 21-day EMA. So 4 over 8 over 21. In this case, the green line is above the yellow line and it's above the red line. So this is a buy signal. In the same way that this was a buy signal, you see that the green one crossed above the yellow one and above the red one. Now, if the opposite happens, wherein the green one is below the red and the yellow, we have a sell signal, which is what we have right here. So if you want to know more about that, you can watch our videos. The links, I sent the links to you through the blog letter. And if you haven't given your Gmail or your email addresses, kindly do so. So I can also send you the Google Drive address. Again, you notice in the links that I showed that in the email, things you need to know about Simple Trader, I also provided you with free books, which I uploaded in the Dropbox, in my Dropbox. Please study those books for long term, for not simply for short-term trading. That will help you become a more prudent trader. What other security? This is an interesting one. We have LR. LR's weekly. Look at this LR. LR made a strong move this week. But if you draw the box for LR, you would find that there's strong resistance at 475 area, 475 to 480. This is where you find the SMA 50 line. If you look at the RSI, the weekly RSI is still below 50. So there's no weekly breakout yet. You just take note of the resistance here. Your resistance is 480. If you go to the daily chart, you might be tempted to enter. But just remember that your first resistance is 480. So you compute for the risk reward from here on. For example, on Monday, you plan to enter at the open at 456, or on Tuesday. Your reward is 456. Your reward is 486 is the resistance, or 480. Again, it's a zone, so we can set 485 as the resistance. The weekly resistance is 480. So let's set it as a an area, 480 to 485. So if the closing now is 456, you have a 29 centavo reward. Versus, what's your risk? Your risk, you should use this as your stop loss point. Do you see this upper wick here, 438? This is your new your new support, because that is the high of the previous box. Price broke above this box. Let's consider this a box. These three candlesticks, these two candlesticks here. It formed a small box, a short box. That would be your support line. Because if price goes back below 438, then this is not a new box anymore. This could probably be a new bigger box where price could continue to consolidate. And no one wants to be stuck in a box that's consolidating, right? No one wants to be stuck here for longer periods of time. So if you're a breakout trader and you bought because the price broke above the box, then you should also cut when price breaks below the box. So what do we have here? 438. If you enter at 456, you have an 18-cent risk versus what was your reward? If you 456, 486, 30-cent reward. Is that a good risk-reward ratio? 18 is to 30. 18 is to 30 is less than a 1 is to 2 risk-reward scenario. It's not a very good risk-reward scenario. A good risk-reward scenario is anything above 1 is to 3. So here, just like the example in SLY, you could wait for the price to break above 485. That would be an entry for those who are careful about their risk-reward scenarios. So what you have to worry about in LR is that RSI in the weekly and monthly chart is still bearish. So if you see that RSI crosses above 50 in the weekly chart, then you have a go signal. You have a stronger chances of a successful breakout. So right now, if you're strict about your conditions, this is not yet a buy based on the weekly chart. It is a buy based on the daily chart. Therefore, if you buy using the daily chart, if you enter using the daily chart, you also exit using the daily chart. Now, so don't mix time frames. When you look at higher time frames, it is only a way to determine resistances and supports. Now, if you enter using the daily time frame, you also exit using the daily time frame. Never mix time frames because that is the best way to lose money in the market. For example, you entered using the daily chart and then price drops below your support in the daily chart, and then you hold on because your reason is it's still above EMA 21 anyway. It's still above the higher low. It's still above the weekly support. For example, in the weekly chart, you use this as your support line, the 394, and then you entered using the daily chart at a break above 438, and then you see that it formed a red candle the day after. You don't want to cut, and you go back to your weekly chart and you say that I didn't cut because it's still above 394, which is the support in the weekly chart. So don't do that because it's not the best way to manage a losing position. If you lose money because it broke support at the time frame in which you entered, just cut without mercy. Okay, so what's another security? STI. This made a strong move today. Like I said earlier, it didn't only make a 52-week high on a Friday, it made a 5-year high on a Friday. If you know about the 52-week high on a Friday rule, perhaps you've heard of it from some forums or from some other traders. The 52-week high on a Friday rule tells you that if price breaks above the 52-week high, which is the 1-year high, on a Friday, then you should hold the position until Monday or Tuesday, depending on the price movement. If price closes strong on the Monday, then you should sell on Tuesday morning. If price closes weak on the Monday after, then you should sell on that Monday. However, some veteran traders do not even wait for the end of the day. If price goes red on the particular Monday, they already sell. Or if it goes to unchanged level after making a gain on Monday, if it suddenly goes orange and it goes unchanged, that's a signal for momentum traders to sell. So what did STI do this week? It did not only make a 52-week high on a Friday, it made a 5-year high on a Friday, which shows bullishness. Now we look at the weekly chart of STI, it's above SMA. If it's above the 50 SMA, we look at the RSI, it crossed above 50 RSI many weeks ago. So if you're very patient about STI, you would have bought here and just waited because it never crossed below SMA 50. Of course, this was a long wait for STI. Now let's look at the monthly chart. Is the RSI above 50 on the monthly chart? Not yet. So again, this still has resistances. But in the monthly chart, now you would only get these RSI readings every month. So it will take a long time. So many traders, momentum traders, limit their RSI monitoring to just the weekly charts because they don't care about the end of month values or end of month RSI anyway. Since they see prices moving in the daily and weekly chart, then that's already bullish. But if you want a really bullish chart, then you have to find the RSI above 50 even in the monthly chart. So we look at the daily chart, RSI is also above 50. So this was a very bullish move that STI made today. And if you can see, there's huge volume. But the problem here is today's volume is less than yesterday's. It's not above the 10-day high. So this is not necessarily a sell. We wait what happens on Monday. If price goes up and volume goes lower again, and then if you see a bearish divergence on the RSI, then just watch price action. If price suddenly turns unchanged and then red, then it shows you that momentum is weakened. So again, always look at charts from larger time frames to verify its bullishness. If you look closely, STI made a buy signal here. Long ago, it trended, but it made a sell signal right here. So a lot of people took profits. So what do we have here? These are probably new holders who accumulated at this area, because this is already a huge rise from 61 to 120. It's already a double your money situation. So traders would be tempted to take profits, and it consolidated for a very long time. At its consolidation, it made an inverse head and shoulders pattern, and then it broke out of its box. So for securities like this, which broke above multi-year highs, we would expect strong movement thereafter. Because imagine if you held this from 5 years ago, if you were this guy, you probably would have already sold, because from this year until this year, especially if you're a trader, you can't wait that long. You probably would have sold already. Either you have sold already, or you're a long-term investor if you're still holding this. If you bought at this area, or you're a terrible trader. If you bought at this area and you still held it until here, you're either a long-term investor or a very bad trader. So expect this price to move strongly above. Let's do the Fibonacci retracement for STI. Let's go for the weekly chart. Let's go for the recent high. It's so difficult to see this. What's the low is? The lowest is 36. So if we adjust 36 here. Here's a problem here. Your 38.2% resistance is at 131. This would be a strong resistance. It closed today at 130. So on Monday, if it breaks above 131 and stays above that, your next resistance is 161. So to simplify your trading, you can look at ranges and forget all about the indicators. Only look at the RSI to confirm the bullishness or bearishness. And you can look at ranges. Now look at 161 at this area. Not only is this a range resistance, if you look to the left, this is where prices pivoted up and down, right? There is a box here where prices pivoted. Prices pivoted here as well. And it used this area as support. This was actually support. See how prices bounces off that area historically here. At the same time, that area is also 50% Fibonacci level. Well, I won't say 50 Fibonacci because 50 is not a Fibonacci level, but it's often used in Fibonacci plotting because it is a very strong resistance for bounces. So if price breaks above 131, expect 161 as your next target. Again, in the monthly chart, STI is also above SMA 50. But the month is not yet over, so we couldn't really consider this candlestick yet. Again, only look at the charts, at the candlesticks for the particular time frame, if the time frame is already completed. For example, this week is already completed, you can use that candlestick. But while this is bullish, this is not yet a confirmed candlestick for June because we're only starting June. What else? We have BHI, B. When I entered this, I entered because of the long-term potential. This is what I've been saying about BHI. It only needs to break 90, 99 and look at the upside. There's no more resistance on top. If you do a Fibonacci, where's your 38%? Your 38% strong resistance is at 198. So that is what I would consider the next strong resistance after price breaks above 99. Of course, 12 is also a resistance, but it's not as strong as a resistance as 198. So I would expect B to go to 198 first and possibly consolidate. There is resistance at 12 because that was the previous high. In average prices for the past 50 periods is 99. Now if you go to the weekly chart, let's remove the Fibonacci first. This is a very beautiful chart for me because look at how prices bounced above SMA 50 and then made strong candlesticks afterward. And then it broke above SMA 50 and made a strong candlestick afterward as well. Now look how long B consolidated. Then the last time it made that high was 2011 at 50. If you watch B almost every day, you would see how jockeys are actually drawing this chart. Look how beautiful the downtrend was here, and then it made this curve. Look at the curve. They're not the kind of random candlesticks. It looks like these have been computed. These have been drawn. It was a beautiful curve that we see here. Previously, when we talked about this on Slack, we counted the candlesticks. We counted that there were 24 candlesticks from here to here, and then price made a surge. But on this next consolidation, price exceeded. I think the candlesticks, there were 28 candlesticks before price actually rallied. But what do we find here? Price already bounced above the SMA EMA 21 line and then made a bullish crossover. Do you see that green over yellow over the red line right there? So it's bullish on the daily chart because price is above SMA 50, RSI is above SMA 50. What about the weekly chart? In the weekly chart, RSI is above 50 as well. Price is also above SMA 50. And there's also a bullish buy signal here. On the monthly chart, now once RSI breaks above SMA 50 here, you see that in the monthly, it's still not above 50, but it's trying to break above it. Currently, it's 49. So at the end of the month, if RSI is already above 50, then we have a multiple time frame confluence already for Boulevard Holdings. If we do a downtrend line, price broke above the trend line here, and then it stayed above it. It retested that trend line as new support, and then bounced back. Now last month, I was expecting this candle, although of course I was hoping that it would go straight to break SMA 50 here. It had to consolidate for a month for a strong move afterwards. Look how the candlestick touched the green line. If prices stayed away from the green line for longer periods, then it would result in a weak uptrend. Now, since price was able to pivot above the green line last month, then we would expect a strong move for B for this month. Look at this. Now, these are some of the chart patterns that you should consider when you trade. This is a pole. This is what you call a pole. For those who haven't studied charts or chart patterns, this is a pole. Each pole is followed by either a pennant or a flag. Now, a flag, like it's either rectangular like that, or the flag could look like this. a pennant. Looks like a small triangle. So if price breaks above that 92 level, the target would be whatever the height, what's the range of this line here? It's 72 to 95. So it's a 0.023 centavo range. So if you want to be conservative, you start counting from the bottom. But realistically, you should start counting 23 from the breakout. So what's 92 plus 23? 115? 115. So the target would be 115 if price breaks out. So this is the favorite pattern of traders. Traders would always look for flags and pennants because they result in strong moves after consolidation, and the consolidation is often very quick. Look at this. This is a flag. This is a pole, a flag, then another pole. But if you're trading this, you should always cut below the support of the flag or the pennant because it could do this. For example, this, it made a strong move. Maybe people expected that it would form a flag here. When it broke below, it never looked back. So if you're trading flags and pennants, always you have to always look at your security because it's a fast security. Once it breaks below the flag or pennant support, you have to get out already. What else? MRC. MRC made a strong move this week as well. Look at the RSI. It's 70, almost 70. The daily chart, it's above 50. It's at 60. The monthly chart, this is one example of a strong security because even the monthly chart is above 50. This is why when you see MRC consolidate, it always bounces back quickly. Look at the monthly chart. This is very bullish because in April, it made a strong candlestick. In May, it consolidated until the green line. In June, it made a strong green candlestick once again. So the consolidation was quick. Look here. This was a flag pattern which broke out. Now what's in store for MRC? It already made 1, 2 strong moves. What's your next resistance? You can do it visually. Of course, your next resistance was a previous high, 48. At 48, you see a lot of resistances to the left. If you look to historical movements, you see where prices bounced off that area, right? So naturally, history repeats itself in the stock market or anywhere else. So it was also strong resistance right here. Support becomes resistance and resistance becomes support. So this would, you tend to consolidate in this area right here. But once it breaks out, your next resistance is at 70. So 48 and then 70. If it breaks above 48, expect 70. So always check out the monthly and the weekly charts. What other interesting security? Do you have any questions? Other securities that you'd like us to chart tonight? Vita. Vita. Again, Vita is another strong security. Look at how it made a strong move last year, right? But when it corrected, it was able to bounce above SMA 50. It stayed above SMA 50 all throughout for several weeks. In the monthly chart, it didn't even retest SMA 50. It just trended above the EMA 21 line. In the daily chart, it broke below SMA 50, went in and out, back and forth. But since the higher time frames are still very strong, you know that these are going to be temporary corrections because the weekly chart tells you that this is still very bullish. So what do we find for Vita? We have that W pattern. In a W pattern, prices would extend to the previous high. And then look what happened to the consolidation. Remember when price consolidates and volumes are low on the consolidation, that is a sign of bullishness. Look at Vita as well. The price breakout was strong right here. The first breakout, this was the first breakout. It was higher than the 10-day high. This was the 10-day high. It was higher. It broke out again. It exceeded the previous high. Broke out again. It exceeded the previous high. But when prices started to consolidate, volumes dropped. This is a bullish signal. So this is Vita's pattern right now. It's looking like a pennant. But remember the 3-day rule in momentum trading? The 3-day rule says that a security, upon reversal, often goes up from 2 to 3 days and drops on the 3rd day. The logic here is the more experienced traders or the more risky traders would buy on day 1 when they see the bounce. On day 2, there will be some followers who see the previous bounce. The more conservative ones would wait for this candlestick to happen before they enter. So this is at candle 1, the risk takers would enter the position. This is this green candle right here. On candle 2, the followers would take their positions, or the more conservative ones would take these positions. On number 3, the less experienced and FOMO traders. What's FOMO? FOMO is fear of missing out. Since they just don't want to be left behind, they buy at any price. These are the people who did not prepare for this trade because they simply chased prices. So often what happens after day 3 is a break below the or a downtrend, a short downtrend follows after day 3. So this is the 3-day rule. Look what happens here. This even exceeded 3 days, 1, 2, 3, and then a drop down. 1, 2, 3, we'd expect a drop down. Look at this. This one, this area here, 1, 2, sorry. This area, 1, 2, 3. There's a bounce, 1, 2, and then 3 again. So there are day 2 to 3, prices drop after a reversal. So the new traders are often the ones who get left on top. So the same applies for price drops. If you look here, in this area, after a strong move, price drops 3 days, 1, 2, 3, and then reverses on the 3rd or 4th day. Price is back again, 2 candles up, on the 3rd day down again. Again, 3 days, down again. So that's the 3-day rule for momentum traders. Rallies often last 3 days and then it makes a short correction. Ion was able to bounce above SMA 50 line. Again, on consolidation, the volumes were low. But what we don't like about the ion chart right now is that it consolidated below the bullish Fibonacci area. Remember that the bullish Fibonacci area is above 138, or the 38.2% Fibonacci area. It broke below that, which shows weakness for ion. If we compare that to Vita, which would be the stronger security? Is it ion or Vita? Of course, it's Vita, because Vita's consolidation was only up to 38.2% Fibonacci. So the more shallow the consolidation, the stronger the security. What about MRC? MRC, of course, you can draw your Fibonacci from wherever. Now, MRC weakened because it dropped towards the 61.8 Fibonacci level. Now, what is the sign that it had already completely reversed? If it breaks above 23.6, today it closed at 42. If it does not drop on Tuesday, if it goes further north, then this would be a continuation of the trend. 23.6% Fibonacci is a very strong resistance. If broken, expect new highs from MRC. Of course, otherwise, it could resist and go back and retest SMA 50. Ed, thank you very much for attending today, and good night. Happy weekend. Bye.